Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you're tuning in from. Well, I'm little bit I'm little bit unwell this morning, but I will try to ensure that I deliver our plans effectively so that we can all be on the same page and be prepared for today's trading session. I would like us to run through our daily routine to confirm that we are good and on the same page. So, if you can see my screen and you can hear my voice loud and clear, please, I would really appreciate your feedbacks by typing in hi in the comment section, as this will make me feel, will assure me that we are all on the same page here. So while I try to load up my charts, let me see what we have here. Okay, I can see a couple of comments. I see 788697. Thank you very much. Cosmin 692. Hello, Carrie. Good morning. Thank you very, very much for your confirmation. Yes, it's Happy Friday, and I'm so excited to welcome you to the last edition for the week. And today promises to be an insightful and exciting episode, as we are going to be taking into consideration some psychological peculiarities, which is um, usual with last trading days of the week, especially when everyone will be closing in some of their positions ahead of the weekend. And because of this, we might likely be seeing some reversal setup unfold on the chart, and we of course want to be taking all this into consideration while we review the current market structure this morning. So, in anticipation of today's trading session, I actually have done a comprehensive analysis of the current market conditions of the assets on our watch list this morning, which includes the US All Sports, the USTech 100, popularly known as NASDAQ, GBPUSD, and of course the XAUUSD, all of which we will be looking at them from a technical standpoint using simple and fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement, and using that information to position ourselves strategically ahead of the New York session today. For those who are joining us for the first time, you're highly welcome on board, and I'm very glad to have you around this morning. And I encourage you to stay tuned in so you don't miss out on any of these valuable ideas we will be deliberating on today. So, once again, you guys are welcome. So, as usual, the first thing we are going to be doing this morning is to check on the economic calendar. And of course, for those who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these events. So for today, we are going to be, hold on a second, please. So as usual, we are going to be looking at the two economic dockets which are affecting the assets on our watch list for this week, and these are the United States and of course the United Kingdom economic docket. Now, we are going to be, let me streamline this. So I will take out all the other economies. So we are only looking at the United States and the United Kingdom. Then we want to streamline this to medium and high impact events so that we can have a better understanding into what majority in the market are looking forward to today in terms of the fundamental factors. So let's see what we have here. So for today, Friday, October 20th, we do have two impactful events. Well, the first one here is the speech from Aka. Patrick Harker is the 11th President and Chief Executive Officer of the 3rd District Federal Reserve Bank at Philadelphia, and is expected to give a speech in about 3 hours from now, and everyone will definitely want to be listening into what he has to say. If you remember yesterday, we witnessed the Fed's chairman's speech, and of course, he had quite a lot to say that will affect the market, that will bring some traction into the market. Well, Powell's softer stance on rate hikes impacted the US dollar significantly, sending the dollar on a downward spiral after his comment. And his remarks were about the persistence of high inflation and the uncertainty about future rate hikes. Um, and this has actually created ripples, offering an opportunity for rival assets to shine. So will this momentum continue today? Well, let's run through the chart from a technical standpoint so that we can have a well-informed trading decision ahead of the New York session today. So as usual, the first financial asset we are going, excuse me, so the first financial asset we are going to be taking on today is going to be the US All Spot. And in fact, we've done very, very well so far this week. Remember, we were initially selling the US All Spot at the beginning of the week before we noticed the potential of some bullish traction during the Tuesday stroke Wednesday's trading session. Now, for the sake of clarity, I would love us to run through what has really been happening in this market in the last 4 days and what led to the decisions we were making since the beginning of this week. Now, the first thing we saw here at the beginning of this week was the consolidation phase, where price was confined within the $86.60 level and the $85.90 level, which emphasized the level of indecision at that point in time. Though we had a buy position triggered after price broke out of that structure, but unfortunately, that position went into a loss as we saw price take us out at our stop loss, then led into some selling pressure, breaking down the support line of that range, retest of structure to incite that bearish move to the downside. Though the bearish momentum didn't last long as we were taken out with a worst case scenario break even on that one. And when we begin to notice the appearance of buy pressure around that $85 level, which we agreed on Monday that it is going to be serving as our key level for the week. And of course, you know how we use our key levels in this community, especially when price action remains above the key level. We want to be looking out for patterns and structures that support the idea of buying that asset. Now, with the emergence of buy pressure above and around that $85 level, on Tuesday, we begin to suspect that we might likely be seeing an uptrend scenario. Now, to further buttress this, we noticed a reversal pattern, sort of a structure where we had something like a double bottom structure where the $85.90 level was serving as the neckline of that pattern. And with the breakout of that structure was what we needed to confirm this, and in fact price since then has been climbing and finding new highs. We were able to scoop in over 200 pips on this one for the first position, and remember that we also added more as we had over 300 pips before the sell pressure began on Wednesday, taking us out of all the buy positions. And during our live session yesterday, we acknowledged the potential that buyers could incite another wave of bullish momentum. And in fact, during our live session yesterday, price action was sitting just right around that $85.90 level, a level which interestingly shares a beautiful confluence with an ascending trend line we spotted around this area. And one of the things we said here yesterday is that as if price remains above that ascending trend line, we shall get ready. We shall be considering the potential of buying this asset. However, to confirm that truly buyers will be in charge, we had this trend line here have to connect in the series of lower highs. And one thing we agreed here yesterday was that if price will break out and retest that trend line, which interestingly shares a confluence with the $86.60 level, then we want to be buying that asset. Now we saw what happened a couple of hours into the New York session. Price did broke out of that structure, retested it a couple of times, and since that moment we have been buying that asset. And if you remember vividly, we were able to identify a couple of more levels that we want to be using to maximizing the potential of this bullish move. So we have levels situated at the $87.50 area. We also added one at the $88.50 area, and of course the $89.30 level. So if you're taking advantage of all of these levels that we identified, you will currently be running with a minimum of 4 positions in profit right now. And if we take a stock of what the profits are, the first position here is currently running with about 260 pips. We have the second position running with about 170 pips. That's about 430 pips in total. And then the third position is currently running with about 70 pips. And the fourth position here is currently running in a loss of about 15 to 19 pips thereabout. So as at this moment, we have roughly over 500 pips in profit on 4 buy positions here. And for those who are taking advantage of this opportunity, well done and kudos to you for being on standby to capitalize on this move. Now the next thing we want to be doing here, of course you know how we do it in this community, especially when price action had moved significantly well in our favor. So in this regard, we do want to be moving our stop losses, secure this current position while we wait out for new trading opportunities for today's trading session. And to move our stop loss here, I will be suggesting anywhere around that third entry below or around the $88.50 level. Let's move our stop loss into the zone, and remember that we do want to be giving enough room for price action to breathe. Now, with a well secured position at this juncture, what is going to be our next line of action? Excuse me. So before we can go into the details here, it is appropriate that we take an holistic stance into what is going on the higher time frame, and of course refresh our memories as to what we were planning at the beginning of the week. Now let's scale back into the 4 hours time frame where we were able to identify a robust reversal setup after considering the inability of sellers to break through that $81 level throughout the course of last week's trading session. And in fact, we saw the transition of price action into a double bottom structure where the $85 area, which I showed you on the 1 hour time frame, was serving as the neckline of that potential reversal pattern, which interestingly also is serving as the key level for trading activities for this week. And of course, we were looking forward to the retest of that neckline to validate the potency of that reversal pattern, which was exactly what happened during the first couple of days of this week, which incited that bullish momentum all the way to the upside. So that was how we capitalized on that, and that was the reason behind making that decision we made in buying the US All Spot. Now, with the way things are going right now, it appears price is back at a crucial juncture in this market, which happens to be the $89.30 area. So, since the beginning of this month, price has been trading below the structure ever since we had the breakdown of this our area at the beginning of the week of this month. Sorry, price retested it, and right now you will see that in the last 20 hours price is trading around that $89.30 area. Now you would agree with me that we are at a crucial juncture in this market. We are depending on how participants react to this new zone here at the $89.30 level will determine if we are going to be adding more buy position to our existing trade or getting ready for another wave of bearish momentum, just as we witnessed here at the beginning of this month. Now, it is very important that we exercise patience at this juncture, where we can look out for either the breakout of the $89.30 level to give us an opportunity to join an uptrend move, or if the selling pressure here persists, then price breaking down, retesting the $88.50 level may bring price back into that ascending trend line, or even break it to incite a sell-off here. So we are at a very crucial juncture in this market, so we shall be scaling down into the lower time frame to see how we are going to be positioning ourselves after understanding how the participants are reacting to the $89.30 level. Now let's scale back down into the 1 hour time frame, and our center of focus for today is basically going to be between the $89.30 level and the $88.50 area here, where depending on the direction of the breakout of this structure will be giving us an insight into where price is likely going for today's trading session. And of course, for those who were part of our live session yesterday, remember we talked about potentially buying above the structure, and if you had done that, you must have had your buy position triggered. So let's see if the market will continue to the upside. However, if this breakout fails and it leads into continued selling pressure below the $89.30 level, then we might likely be seeing an opportunity to join a counter trend at the breakdown retest of the $88.50 level. So if selling pressure persists below the $89.30 level, then we want to be positioning ourselves just right below that $88.50 level, breakdown retest of that structure, so that we can join the downtrend scenario. So let's see how this is going to play out, and if price drops to as far as this ascending trend line, now depending on what happens here will determine if we are going to be adding more sell position. That is, if price breakdown retest that trend line to the downside, we will be adding more sell position. And if we begin to notice reversal patterns like double bottom structure here, we will get ready for another wave of bullish momentum. So these are my views here on the US All Spot for today. We still remain very bearish here. Remember, we have a buy stop order triggered above the $89.30 level, and for those who are yet to be part of this, you can position yourselves above this level. So let's see how it's going to play out. If price remains above the $89.30, we hold on to our bullish buyers, but if selling pressure persists, then a breakdown of the $88.50 level will be welcoming selling opportunities. So kindly mark down these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So if you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds to wait and see if there are any questions whatsoever, and you can as well use that time to mark out those levels on your chart. So I see a couple of comments here. I can see Mike4176. Good morning to you. Um, Backett, good morning. Michael856, happy Friday to you too. Good morning and glad to have you around with us this morning. So, in the absence of no questions, I want to assume that we are all on the same page. So, in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list this morning is the USTech100, which is popularly known as the Nasdaq. Now, the Nasdaq is an asset we have been selling since the midweek, where we noticed the appearance of selling pressure after a failed bullish attempt. Remember, we were buying these at the beginning of the week, and that's the descending trend line you see on your screen. That is the one highlighted in red, was supposed to be serving as our yardstick to guide our trading activity for this week. And of course, you know how we do it. Whenever price remains below that descending trend line, we hold on to a bearish idea. So let's run through how the weeks really started for us in this community and what led to the decisions we made. Now, at the beginning of the week, we had price confined within the 15,065 level and the $15,000 area and the 14,980 zone. And one of the things we saw at the beginning of the week was this emergence of buy pressure around that psychological level, the $15,000 area, giving us a structure that looks more like a reversal pattern in the form of a double bottom structure, where the neckline of that range happens to be the resistant line of that range now happens to be the neckline of that reversal pattern. And of course, we needed to see price break out of this resistant line to give us an opportunity to buy, and this was exactly what happened as we saw price trigger our first buy position after breaking out of the 15,065 level, as we saw price move over 140 pips in our favor. So following that bullish attempt, we now noticed how that 15,200 area negated all attempt by the buyers to break out of that structure. And throughout the course of Monday, Tuesday, and Wednesday's trading session, we noticed how price gradually transitioned into lower highs in this market, giving us that descending trend line to work with. And since that moment, we sold below the 15,065 area, and we continue to add more sell positions as price action went further to break down that $15,000 level. And if you are with us during our live session yesterday, I told us all this was where we were during our live session. So we were around the 14,960, and I told us all that this old bullish move we've seen here may actually be a retracement, and that depending on how the market reacts to that zone between the $15,000 area and the $14,980 zone will determine what our next line of action will be. And we said here that a breakout of that structure will welcome buying opportunity, which of course never happened, and that if continued selling pressure persists below this descending trend line, we will be joining the downtrend move, which was exactly what happened as we saw price continue to the downside from that area. Then price went on to break down our key level at the 14,850, as you will be seeing here, to incite more selling opportunities. And for those who are taking advantage of all of these positions, Well done, and kudos to you for being on standby to capitalize on that move. So the first position here is currently running with about over 300 pips in profit. The second position here is running over 260 pips, and of course the third position here is running with over 100 pips. So roughly we have over 600 pips in profit from minimum of 3 sell positions on the USTech 100 as at today's trading session. So well done to everyone who has been part of this profitable journey. Now, with this being said here, the next thing we want to be doing is to secure the current sell position by moving all our stop losses and to a critical area to lock in this position. And I will be suggesting that anywhere below that our key level, that is between the 14,850 and the 14,800, seems most appropriate to secure this current sell position. Now, with the positions well secured at this juncture, what is going to be our next line of action for today? Well, before we go into that details, let's run through the higher time frame. Let's look at things from an holistic standpoint. Now, remember that we had this neckline of the reversal pattern. Let me show you that reversal pattern one more time. So we had this structure here where we had our neckline situated at the 14,850. And we talked about this. We emphasized the importance of this 14,850 yesterday, where we said that if price buy pressure persists leading to the breakout of the 15,000 area, we will be in for a bullish momentum, and that if price breaks down the 14,850, then we will start considering selling. Now we have seen price break down the 14,850 during the New York session yesterday with an engulfing bearish candle to give us an insight into potential downtrend continuation here. Now, from a technical standpoint, when price breaks down a structure such as the 14,850, as you'll see here, we expect that at some point in time price may transition into a retracement back into structure, retest it to incite a downtrend continuation. So this is one of the ideas we are going to be looking at today. If price will continue, will retrace back into the 14,850. However, if this does not happen, then we might likely be seeing a consolidation phase which appears to be going on right now in the last 16 to 18 hours, which could lead to the breakdown of the support line of that range to incite a downtrend move. Now, with the information we have here, let's scale down into the 1 hour time frame so that we can have a detailed understanding of what the structure within this consolidation phase is giving us to decide what our next line of action will be. So scaling down into the 1 hour time frame, we will begin to see things more clearly. Now, if we take a second to try and mark out this the support and the resistance line of this range, so we have something like this, and then we have the resistance line of that range around this area. So let's bring back our candle chart so that we can do some little adjustments. Okay, so we have the 14,770. I would rather use 14,770 for the resistance line. So let's mark this level out on our chart. So we have the 14,770 level as the resistance line of that range, and let's readjust this so we can capture majority of the pivot lows. So we have 14,710 for the support line of this range. So now we've just captured a simple setup that we are going to be using to guide our trading decision for today. Now, from a technical standpoint, you know how we do it. Whenever we have price action caught within a range like this, we exercise patience, waiting for either the breakout of the range for buying opportunities or the breakdown of the range for selling opportunities. And if we consider the impulsive move that led us into this consolidation phase, we might likely the potential, of a downtrend continuation pattern is very high considering the impulsive bearish leg we saw here. So the breakdown retest of the 14,710 level will be welcome in selling opportunities. So for us to add more sell position to our existing trade, we will want to see price action break down the 14,710 area, retest the structure for confirmation to add more sell position to our existing trade. However, if price breaks out of the 14,770, well, this will be considered as a counter trend opportunity, which I will not be part of. But if you are a counter trend trader or a scalper, you might want to take advantage of that move. As a breakout retest might see price retrace back into either the 14,850 that was broken yesterday, which will be dovetailing to about 90 pips thereabout, and then this descending trend line that has been supporting the bearish momentum since the beginning of the week, which will be dovetailing to about 180 pips. So if price will break out of the 14,780, I want to see how far will this retracement phase go before the next second wave of bearish momentum happen. So what this simply means is that if you are joining a counter trend opportunity, you do want to see how the market would react to the structures, the 14,850, and of course that descending trend line to decide if we are going to be joining a bearish momentum or inciting a bullish opportunity here. So let's see how the market will play out on this one. So a breakout of the 14,770 will be considered to be a buying a counter trend opportunity. And if price breaks down the 14,710, we want to be looking out for more selling opportunities here. So today's trading session, our center of focus is basically between the 14,770 and the 14,710, where depending on where the direction of the breakout happens, will be giving us clues into where to position ourselves for. So these are my views here on the USTech100. If you have any questions whatsoever, feel free to let me know in the comments section. So as usual, I'm going to be taking the next 10 to 15 seconds half to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart. All right. So, in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be moving on to the next asset on our watch list. I see your comments, Wago. Good morning to you. I see your comments, Enoch Sparrow. I hope I pronounced that correctly. You're welcome and glad to have you around with us this morning. So with that being said here, let's dive right into the next asset on our watch list. So the next asset on our watch list here is the GBPUSD, which has actually been struggling in the last 24 to 36 hours in this particular market. Well, we were actually thinking that as at yesterday, following the Fed's chairman speech, where his comments were more of a dovish statement, as this wasn't favoring the US dollar at all, as we saw how the dollar nosedived to the downside, given the other assets or other instruments the privilege of gaining some momentum against the US dollar. And this was not seen on the GBPUSD yesterday, as we saw failed buying attempts most of the time yesterday. And if you remember during our live session yesterday, we talked about these two trend lines here that we said we will be using to guide our trading decisions for yesterday. And one of the reasons why we sold on Wednesday in this market, remember, we had this ascending trend line which we spotted, and of course we witnessed the breakdown and retest of this ascending trend line to insight that sell position we took on Wednesday. Remember, we had the situation breakdown retest as we rode the move all the way into the 1.20900 area, where we noticed some sharp rejections revealing some buying presses around that area, which triggered the buy positions we saw yesterday. And of course, I made mention here yesterday that if price still remains below that descending trend line, we shall still feel comfortable in our sell position. However, something interesting happened prior to the Fed's chairman speech. We saw the breakout of the trend line with an engulfing bullish candle, and price came back down, dropping back down below that descending trend line. So right now we are at a critical juncture in this market. If you look at the structure closely, well, it's looking as if price is bearish, especially after considering what has been going on in this market since Wednesday, which this descending trend line further emphasizes at this point. However, despite the lower highs here, you will notice that price is yet to find a lower low to confirm the strength of the sellers. Now let's look at what happened here yesterday morning. We saw that as soon as price got to the lowest point it has been for this week, that is around the 1.20900 area, we saw sharp rejections where we had a candle which closed in the form of a hammer candle. And of course, when we notice this, this is a sign that buyers are present behind the scenes. Now look at what happened a couple of hours ago. We can see the inability of sellers to break through the structure. In fact, a higher low in this case scenario, it is a sign that buyers are gradually gaining momentum. Now the rejection of this 1.20900 area in the last 24 hours is a red flag that buyers may likely be coming in. So I would like to consider this area as an accumulation phase where it could serve as a platform to incite an uptrend move. Now, if we are going to be looking forward to buying opportunities here, what is it that we want to see on this chart that will make us feel comfortable joining a bullish momentum? Well, the first thing I would like to state here is that descending trend line. In fact, we will need that descending trend line to be breached. That is, price breakout, retest that trend line for us to join an uptrend scenario. Now, in the last 2 hours, price has been oscillating around that trend line. So to be precise here, our center of focus for today is basically going to be between the 1.21375 and the 1.21250, where depending on the direction of the breakout of the zone will determine what our next line of action will be. Personally, I will say here that we can afford to risk a buy positions above the 1.21250, and if price continues up, then we want to be adding more position as we ride that momentum all the way to the upside. Now for the buy position, we also have multiple entries, multiple levels that we can use to maximize this move. So we have the 1.21625, we have the 1.21750. Hold on a second, please. Shake here. All right, I'm sorry for the break in transmission. We had the power outage, so we had to switch. All right, so as I was saying here, we have multiple levels that we can actually use to maximize the potential of this bullish move if price action breaks out retest levels such as the 1.21625, 1.21750, and of course the 1.22200 level. So let's use these levels here to guide our trading decisions for today. So with the way things are going at this point, I'm of the opinion that price may continue that uptrend situation, as we have noticed that sellers have found it difficult to break through this area. So we hold on to a bullish bias on this one. However, in as much as we're looking out for buying opportunities here, you know how we do it in this community, we also want to keep tabs with the opposite direction too as well. So what potential do the sellers have in this current structure? Well, for me to consider selling the GBPUSD today, like I said earlier, I'm holding on to a bullish bias. But for me to sell the GBPUSD today, I would rather want to see price action take out all the buy positions around the 1.20900 area, like a breakdown, retest of structure to incite a sell-off here. So for me to sell, I would rather want to see price take out all the buy positions along or around the 1.20900 area before joining that move. But unfortunately, I don't think sellers will be able to dictate the pace based on the nature of the US dollar in recent times, especially following the Fed's chairman's speech yesterday. So let's see how this is going to play out. If price breaks down the 1.20900 area, we look out for selling opportunities. But as long as price remains above our key level at the 1.21250, we hold on to a bullish bias. So these are my views here on the GBPUSD. So I encourage you to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading decisions for today. So I don't know if you have any questions. If you do, please feel free to drop them in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions as regards to my explanations thus far, and you can as well use that time to mark out these levels on your charts. So I see your comment, Hola. Hola, good morning to you and glad to have you around with us this morning. So you asking what is going on here? Well, first of all, we are technical traders who trade the financial market. So we do trade assets such as the currency pairs, the commodities, cryptocurrencies, and options. So we gather here on a daily basis with the utmost intent of identifying trading opportunities ahead of the New York session. So we come here to identify trading opportunities while we also manage our existing position if we have any running. And we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And I do encourage you to stay tuned in so that you get to understand how this works. The more time you spend with us, the better you get to understand how our strategy works here, and eventually be able to use the information we gather here to make your own independent trading decisions. So once again, you are welcome, Ola. I'm glad to have you around with us this morning. So in the absence of no questions, I want to assume that we are all on the same page, and it's on this note we shall be moving on to the last asset on our watch list for today. So the last asset on our watch list for today is the XAUUSD, which is popularly known as the gold spot. This is my favorite asset, and I can say here that the XAUUSD happens to be the most profitable asset amongst the assets on our watch list for this week. As you will see here, we've been buying this asset since the beginning of the week after we observed the inabilities of sellers to break through the 1915 during the early days of this week. And the appearance of this demand zone here was a very beautiful opportunity for us to start considering buying. And in addition to the appearance of that demand zone was this beautiful uptrend continuation pattern that we spotted on this chart. Remember, we had a pennant lookalike structure after this impulsive move. We saw price action transition into forming this pattern, which from a technical standpoint is considered to be a strong uptrend continuation pattern. Now we saw price action break out of that resistant line of that pattern, as you will see here, to validate the potency of that uptrend scenario. And of course, you know what we did. We positioned ourselves just exactly above the 1918 level to capitalize on that uptrend move. And since that moment, we have been buying the XAUUSD. As you saw, we had the 1923. We added more positions there. We added more positions at the $1927.50 level, the 1930, the 1940. So we were just milking this move all the way up. And during our live session yesterday, we identified new setups as we saw price break down this descending trend line here, and as a result of this, we said that we are going to either look out for selling opportunities only if price breaks down the 1946 level to the downside, which of course never happened. And the other possibility we were looking at was the breakout retest of the 1951, and as you will see here, we were able to join another buy position at the breakout of the $1951.50 level, added more positions at the breakout of the 1958, 1963, as we rode that move all the way to the upside. In fact, it has been a phenomenal week for us on the XAUUSD, as at this point in time we are running with over 1,000 pips in profit on this asset. And for those of us who are part of this profitable journey, well done and kudos to you for being on standby to capitalize on this move. Now, the next thing we are going to be doing at this juncture, of course you know what we do whenever price moves significantly well in our favor. The next thing we want to be doing right now is to move all our stop losses and secure this current buy position, as we might likely be seeing some profit taking activity happen in this market, especially as we getting ready for the weekend. And most key players in the market in preparation of the weekend usually closing some of their position, rounding off their trading activities for this week. And if this happens, we are likely going to be seeing this reflect on the chart as price retracing to the downside, maybe into the ascending trend line. We never can tell. So let's ensure we move our stop losses accordingly. And from this current structure here, I will suggest that anywhere below the 1,979 area seems most appropriate. And remember that we do want to be given enough room for price action to breathe. So with a well secured position at this juncture, what is going to be our next line of action for today? How are we going to continue buying the XAUUSD, or are there chances that sellers could come in at any point in time? Now, before we go into the details here, I would love us to run through the higher time frame so that we can have an holistic perspective into what is going on here. And of course, for those who are joining for the first time, they can also be on the same page with us. Now, the first thing we did at the beginning of the week was to take into consideration the nature of price action at the on the 4 hours time frame, and of course, we saw this descending trend line. As you will see that since the beginning of the month of April, price action had been on a downtrend scenario, giving us this descending trend line we saw here at the beginning of the week. And one interesting thing here was the breakout of that descending trend line during the later part of last week trading session. And one of the conditions we were looking for at the beginning of the week was a retest of the structure to inside that uptrend move, which we of course took advantage of. Now, if we zoom out and look at where price action is right now, you will see that price is at a crucial juncture in the market, which has been respected since the month of May. And this area here has been a strong selling niche. So let me show you what I'm talking about here. So if we look at the structure here around the 1990 and the 1982 area had been a strong selling niche in this market since the month of May. Now look at what has been going on here. Look at selling pressure happening here, selling pressure happening around here. Fast forward to the month of July, we saw selling pressure again, and right now price action appears to gradually approach that structure. In fact, price is within that zone at this point in time. And at this point, you would agree with me that we are at a crucial juncture in this market as we are back into a territory which is known to be for the sellers at this area. Now, the question going into the New York session today is that are we going to be seeing selling pressure resume again just like it has been doing in the last 4 to 5 months? Or are we going to be seeing a breakout of this level, making this area a new platform for another wave of bullish momentum? So for us to have a better understanding into what is going on around the 1982 and the 1990 area, we do want to be scaling down into the lower time frame to see how market participants has been reacting to this zone here to give us an insight into what we are going to be doing next. So if we scale down into the 1 hour time frame, let's see what has really been going on around this area. Now let's zoom into the structure. So I will have to zoom in very well, and let me bring out my line chart here. First and first here, we want to acknowledge the higher lows, giving us a beautiful ascending trend line to work with. Now you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to feel comfortable in our buy positions while we still look out for more opportunities to buy. Now let's bring back our candle chart and let's do some little adjustment here so that it can capture most of the pivot lows of this higher low. So here we are right now. So we have an ascending trend line. So let's continue to maintain a bullish bias as long as price remains above this trend line. Then we have the highest point for this week, which is situated exactly at a psychological level at the 1985 area, which happens to be the highest point price action has been for this week. Now let's mark out these levels on our chart. So we are going to be acknowledging that level. Hold on a second. So we have the 1985 level. I will encourage you to mark that level out on your chart too as well, as we will be needing it as a reference point to guide our uptrend continuation. So now if price action continues to the upside here, then I want to be having a buy stop order above the structure to capitalize on an uptrend continuation. Now there are two ways to which we can capitalize on this move. Now for those of us who have been part of this profitable journey since the beginning of the week, you must be in tremendous profit at this point in time, so we can afford to leverage on the profit we had made so far this week to test waters above the 1985 and see if that buy opportunity is going to work And if it doesn't work, we know that we are only risking some of the profit we are made this week. Now, for those of us who are going to be joining us for the first time, that is, you are coming in from a clean slate, then I would encourage you to exercise patience and wait for the breakout of this 1985 to happen first of all, then wait for price to either come back and retest the structure or respect the ascending trend line before we want to be joining an uptrend move, as a retest of structure which will be characterized with buy pressure around that zone will be all we need to feel comfortable joining an uptrend situation here. So we continue to hold on to a bullish bias on this asset, and fundamentally, if we look at what is going on in the market, after 3 weeks of losses, that is prior to last week's trading session, gold prices are marking significant turnaround at this point in time, as it has hit a fresh 3-month highs above the 1970, showing its resilience so far. And with this scenario coupled with the escalating tension in the Middle East, I mean the Israel-Hamas situation, I'm of the opinion that majority in the market will feel comfortable putting their funds in safe haven assets such as the gold. So this is why I still hold on to a bullish bias on the XAUUSD. However, in as much as we're looking out for buying opportunities in this market, we cannot ignore the potentials that sellers can also come into this market. Remember, today is the last trading day of the week, and this kind of days are always known to be profit-taking days, as majority in the market will be rounding off on their positions, getting ready for the weekend, closing in, taking in some of the profit from whatever they've made so far this week, and this could reflect on the chart as price retracing to the downside. Now, if we are going to be considering selling here, what is it that we want to see on this chart that will make us feel comfortable considering selling this asset? Well, at this point in time, the only thing that will make me want to consider selling here is for price to break down the $1,982 level, which interestingly shares a beautiful confluence with that ascending trend line we just spotted here. Now, if price will break down that ascending trend line, it will be a beautiful sign that the trend line may no longer have the capacity to maintain that bullish trend. And if a breakdown happens, we have no other choice than to get ready for a momentum shift. Now, remember that we are not going to be getting too excited here, as we will need some confirmations before we jump into the sell position. And one of the things we are going to be looking out for to join the sell positions here is, after the breakdown happens, we want to see signs that buyers are finding it difficult to climb back above that ascending trend line, which would reflect on the chart as price retesting, retracing back to retest either the ascending trend line or the 1982 level, where continued selling pressure below the structure will give us a confirmation of joining that downtrend move. So this is the only condition that will make me want to consider selling this asset for today. So in the meantime, we hold on to a bullish bias unless price breaks down the ascending trend line. So these are my views here on the XAUUSD for today. I don't know if you have any questions. If you do, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off, waiting for your inquiries, and you can also use that time to mark out these very crucial levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So I see your comment, Ola. You are very much welcome, and I'm very excited to have you around with us. I look forward to seeing more of you next week as well. I see your comment, Mash777. Good morning to you. Glad to have you with us this morning. So it's been a wonderful day with us here. I do hope I was able to make myself very clear. I'm a little bit under the weather this morning, so I hope that it didn't really affect my rendition this morning. So in that note, I would like to appreciate every single one of you. It has been a wonderful week with us here this on the Extra and Speed Live, as we were able to treat four major assets and did follow up through with them. And in fact, we did pretty well this week on this asset, except for the GBPUSD, which has been consolidating most of the past of the week. But I'm of the opinion that pair will likely gain some traction today, so let's be on standby to capitalize on that move. So this week so far, we took the USOILSPOT, the USTech100, popularly known as the Nasdaq. We also treated the GBPUSD and of course the XAUUSD, which is popularly known as the gold spot. So it has been quite an interesting week for every one of us in this community. And for those who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I encourage you to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand how things works here, and of course how our strategy works. And in the long term, you will be able to use the information gathered here to make your own independent trading decisions. So once again, you are highly welcome on board. And on this note, I want to wish you all the best of luck today. And remember that we have setups that guides our trading decisions. So let's allow our setups to mature before we jump into any trading positions. So on this note, I wish us all the best of luck. I see a comment, Cairo Karim. Good morning to you. And I wish you a wonderful weekend too as well. And in fact, I look forward to seeing you same time on Monday morning, 10 a.m. UTC, 11 a.m. West African time, as we come back here again to take another fresh new look at the financial market as we get ourselves prepared for the new week. Do have a wonderful evening, everyone. Bye bye.